Good evening. Good evening. Ira Epstein, and here we are with your financial market wrap-up. And it's for Friday, the 13th. Oh my gosh, that isn't good. Friday the 13th, 2024. And it's your financial market wrap-up, the weekend edition. So we're going to look at one monthly chart, and then everything else is going to be off the weekend. Now, instead of me normally, I go through, oh, here's Monday's data. Folks, the all-important data this week, don't waste your time. And there's going to be a lot of data during the week. But the elephant in the room is, what does the Fed do on Wednesday? They go into the meeting on the 17th, 18th. They have the 1 o'clock announcement, and that's followed by the FOMC. I think we get some dot plots in this one, so we want to take a look at it. I think we do. And we want to see that because they give some projections in this. So this is going to be important there. Now, as you know, the big argument, and it is an argument, it's not does the Fed cut. Is it 25 or 50 basis points? I think you can boil it down to the most simple of terms. It's 25 points if the Fed is truly just data dependent. It can go 50 points if the Fed wants to now be forward thinking and say, let's get ahead of a curve dealing with the labor. You can't argue that's the case necessarily with CPI. It's a bit sticky. We've seen those numbers. But if they're as worried about the labor market, as the Fed chair said, and they want to take a shot at doing something, they can go big for the 50. It's a flip of a coin. Earlier in the week, actually, very beginning of the week, it was down. Then as the week went on, the averages, the swap, if you look at the CME FedWatch page, you see what the gambling percentages are, as I like to call them. It's where traders are making their wagers with real money. Are they betting it's 50 points, 25 points? What are they seeing after that? Go. It's a very, very good page. Now, I've done a gold report, a special report for you to try, and this is in our special report area. So let me explain how this works. If you go to our website, iraepstein.com, you'll see on the very top left, it'll say special gold report. If you're already a subscriber, a paid subscriber, just go to your research area. It's there for you. I have sent out, if you're on my mailing list, already a link for it. We're going to talk seasonal charts. We're going to talk charts for the election. What is the market doing just leading up to it and right after it? I think it's going to be a cool report for you. And I don't just cover the futures. I cover December gold for the daily. I cover the weekly gold. I cover GLD. I cover GDX for you. And I give you an idea what to do, where I see the support coming in the market. You cannot say, if you're a regular viewer here, that I wasn't calling for 2,600. I was not only calling for it today in the D's Gold, that's the one we've been watching. It hit it, got through that, so I feel good. Now, there is another price count, but I'm only going to tell that to my subscribers. I'm not going to tell it to anybody just yet. Get the gold report, and I hope you join us with that. Okay, there'll be a link on throughout the whole video here. Up here, you can hit that if you want. That'll take you to the page that you need. Got it? Okay, so the elephant in the room this week, and we get a lot of data, don't get me wrong. We get a real lot of economic data, but there's one elephant. And the elephant in the room is going to be, does the Fed go 50 basis points or 25? I'll give you my take on the deal. If the Fed is 100% data dependent, they are 25 points. If the Fed is forward looking, in other words, they've decided that they can abandon with some leeway just being data dependent and they're looking down the road, it's time for a 50 basis point. It's a flip of a coin which way they'll go. What about the markets? Well, let's go to a market before I even do that. Let's look at the S&P. Right now, we're at mid-month, all right? Sunday's the 15th. You're down 0.55%. I started this off telling you that often you're down to 0.5 to 1% for the month of September, but it's the weakest month of the year. I went back just before I did this and looked at some more data. From 1928 to 2021, the market averaged a 1% decline. So, yeah, you can get bigger, smaller, you can get bigger breaks. It's not what I'm getting at. You're in the average number right now. So how will the market react after the Fed begins the rate cut cycle? That's going to be important. There's a lot to deal with. When you take a look at the market, and I know you were watching, many of you watching me every day through this, as the market was breaking down on the weekly chart, I said that often markets go to an 18-day average. They fight a battle to decide what to do next. You're right there. The market's already held it. You've rallied back. Are we going to clear this area, or is the market going to come back down after the case and then wait for the election? Now, in the election, there's a whole cycle. In my special report, I show you what the markets do leading up. It's like 10 days before and 10 days after the election of November 5th. And again, seasonal studies come in on that for the gold market. Then we come to the S&P action on the weekly. Well, a break, you've come back, you wouldn't even know what's going on. You do realize last week, this is really the interesting part of the chart, you were down 4.27%. It was ugly going home, right? And I was here saying, well, we've got a trade top of sorts here. We have a trade bottom there. That's basically what I said. Go look. I didn't expect that you were coming back 3.88% this week, but you did. So this market is trying to figure out what do we do next. I think you'd agree. In terms of the swing line, there is no trend. You have a market that's got a higher high and a lower low. Where did the market fall to and hold? You hear me say it, and this is the weekly, not that monthly chart. And this one's not close only. This one is highs and lows. You don't think that that was the battleground just like here? It was. Next, where's the resistance? Well, if you clear this high, it's literally up at that one, which happens to come right in at that 57.36 level, right by the upper Bollinger Band. So we can see where the resistance would be. Are we overbought on a weekly basis? Absolutely. Anytime you get readings that are over 70 in either of the K or the D line, that red is the K, the blue the D. The only difference, by the way, in these two numbers is one uses 3 days worth of data, weeks of data, because this is a weekly chart, and the other 5 weeks of data. The formula is the same. Mine will look different than yours because I've altered the formula. The gentleman that developed this, I came up with an idea on it, showed him what I had done. He's passed away many years since. And I said, I think I found something that this is phenomenal, but it's so much better this way. And I have been using it my way ever since, and I'm more than pleased with it. One of my favorite trading indicators. All right, so when looking at the market, I see it overbought, void of a trend. I see the resistance, and you know the rest of the story. In the Dow, it's a similar pattern. You came down, you have been fighting for direction each time you break to this 18-week average. You tell me that you're not fighting there. And what does it do? Yes, the market has gone on and made higher highs all through the marketplace. In the NASDAQ, where are you fighting? I mean, when you look at a weekly chart, it all sort of comes in easier. Well, the trend is down. The market on each thrust under that 18-week doesn't stay there. It comes right back to that by the end of the week almost, with one exception here. But you're just about always hitting it. This is the week you didn't, but you came right back with the vengeance. In the Russell, the trend is down, but the bias is up. You have a downtrend, lower highs, lower lows. That's trending. But because the market's got upside bias, not much to do. Now, last week you closed under this. So last week going home, this chart looked quite bearish. I'm sorry, I can't do it. I've done something else there. Because of that, you would have to take out on this chart a 22.4930. I can't get to the exact high there, but it's going to be 22.4930. That will be the number that I'd be looking at. That's the number you have to clear in order to be out of the downtrend. But even when you do that, you'll be right into the Bollinger Band, which is 30 points above you. In the 5-year note, the trend is up. Now, the market, as you know, is anticipating and is getting ahead of itself. Look at all these rates. I mean, look at your 10-year notes. They're 3.67. You know, people were talking you were going back to 6% in June. We're only in September, and you're the other way by quite a bit. Higher lows, higher highs. Look at how you're fighting here. And the question is, can you embed? You haven't quite done it yet. Same in the 10-year, haven't embedded, and you're back into the resistance point. In the dollar, it is still bearish. It is fully embedded. It's got the bearish signal. It has been falling in anticipation that the Fed is going to cut rates, that'll hurt the value of the dollar. This is the theory. The market will go down. And I still have earmarked here the 124, the 144 level on a weekly chart. In the euro currency, the battle is for direction to the upside. You can see where the fight is. It's the 200-day moving average. The pattern is still one of higher lows, higher highs. The correction off the upper Bollinger Band has occurred, and you're backing off. You've never embedded. You're just overbought. Canadian dollar on a weekly chart is void of a trend. You have here a break that's under that one, a rally over that. You have an overbought condition. You've come up in the rally to hit both the 100-day average and the upper Bollinger Band, and when you're overbought, I teach you here, that's where the pros will bail out. That doesn't mean they're going short. But if they had developed a plan to catch momentum trade there, that's the end of the momentum typically. The yen is a difficult trade. You are in an area that you should have the resistance, but you've been there. You got here on this first run. You haven't given that up. You keep hitting almost every week. Now, the 100-day average, you've got higher lows, higher highs, and you're overbought. It is widely expected that now, analysts at least think this before the end of the year, that they are going to raise interest rates again in Japan, but this is only September 13th. Is the market getting ahead of itself or not? So you've got to start looking in, could they be going quicker than that? When I look at Bitcoin, it is still very much in a bearish trend. Now, it's sort of moderating it. Follow me. Lower highs, certainly it had been lower lows, but I think you'd agree that the spike here and then the rally caused this low to be higher than that. So you're starting to do this. The market's starting to pick up on the bottom. To get really bearish again, it's got to take out last week's low, and it doesn't look like it wants to just yet. The resistance is 63.06, 63,062. In the Brent WTI differential, well, you had one spike back up recently. You can see each time you have been getting where Brent gets over WTI's and the differential being the 18-week average, within a week or two, it goes the other way. And that's something you got to keep your eye on. In terms of the energy, I realized that we had Hurricane Francine. And the market reacted to it by giving on the daily charts a bounce, but by the end of the week, you were up 0.77, 55 points. Why? I think you're trying to get back into the Bollinger Band, but how the math is going to work this week, because of this, that Bollinger Band's going to fall, and just if you open steady, you're probably over that band. I'm going to say the same thing is true of WTI. When you look at gasoline, are you going to get back and close over the Bollinger Band or just fall apart on it? Now you have a market here. Let's see if this will work. Yeah. So we have week one of embedding this week. We go back last week, it was embedding. The week before, no. So this week is a super important week coming up. Will the market try to rally or not? It's going to be pins and needles for traders like me watching that type of market, I can tell you that. So again, the gold report, please remember, take a look at it. I've already committed to doing a silver report right behind it, and I'll give you a sneak. I think silver could be more bullish than gold on the next cycle up now. Shh, don't tell anybody I said that. I will see you all next week. Take care.